Hey, welcome back to the Consulting Mind. Today, I'm going to walk you through why does the Federal Reserve Bank of New York play such a key role in the overall Fed system. Sometimes, I think you might have been also aware that some Fed official might speak differently from other Fed officials, or even deviating a lot from the President Jay Powell. So I'm not sure if you ever wonder that isn't that Fed as a single united organization should have the same directional view towards some key economic policy, even though they might come from different economic background and backed up by different economic theories. But isn't that they should have a united directions? So if you have this inquiry, I think this video might have provide you some hints about the dynamic involved. So when we talk about the Federal Reserve System, actually it is comprised of two key components and it is a two-part structure. The first one is a central authority named the Board of Governors, which is located in Washington, D.C. And Jay Powell is the president of that. And then the second one is a decentralized network comprising of 12 Federal Reserve Bank located throughout in the US, such as Chicago, St. Louis, Boston, New York. And let's first start with the Board of Governors. So first of all, essentially, they are formed by a group of economists, and where they are nominated by the US presidents, and they are delegated and authorized by the Congress, and they get their authority from the president and the Congress. But then you have to be aware that they are not really the key person or stay within the inner circle of the Wall Street. And then for the 12 federal banks located throughout the US, and I'll call that the local Fed. Each bank actually represents the bank interest of their corresponding region, like San Francisco, Chicago. And they are 100% private bank, privately owned by corresponding shareholders. And who are their shareholders? Those major and large local banks are those local Fed shareholders. And then we can move on to a very critical details and yet very important ones. And some of you might not have been aware of that previously. Is the monetary policy execution power is actually grabbed in New York Fed hand. I'm going to use a few examples to illustrate that. So to start with, think about issuing treasuries. When the US Fed or when the US government is going to issue treasury, they will first have to get a sense about whether or not the treasury, the bond will be sellable, whether or not there will be sufficient potential buyers, either from the primary dealers or from other counterparty to obtain the treasury. And they will have to get a sense about what should be the interest to be given by this issuing. And then not to mention the volume, how much volume should be offered. So where does this kind of market sense or information come from? Of course, it comes from the insider connection and channel from the Wall Street. So the same situation also apply in the open market operation and the quantitative easing, as if when they are trying to influence the Fed fund rate, they will have to do it via the sale and the purchase of the bond. So again, they will have to make this happen with the market dealers, with those primary dealers. And those connection and those channel is grabbed under the New York Fed hand instead of the Board of Governors. And the next critical details that I would like to share with you is that those 12 Federal Reserve Bank interests are not fully aligned. So to start with, for those local bank apart from the New York, basically it is not hard to imagine that their interests and their profit come from the local bank loan. They are directly affected by the local inflation status, employment status, and all these factors will be reflected in the local bank balance sheet, including the bad debt ratio and the provisional loss. But then on the other hand, for the New York bank, so their key interest is to maintain a healthy function and a proper function of the market deals. They will have to make sure that all the transactions, including those equity, those bond, derivative with the Wall Street or via the Wall Street will be operating vividly and properly. So their profit is not mainly from the loans, but rather their profit mainly come from the deal, come from the transaction. So they are key interest differentiation. So when you understand that their interest is not fully aligned, then we can move on to the next part. Since their interest is not aligned, you will be easy to understand now why they might have a different view or different perspective toward quantitative easing. Although I'm not saying that the background, they might come from different economic background, believing different theory. I'm not saying that this is not true, but and even more important that factor is that the interest is not aligned, as mentioned before. So when it comes to QE, let's first talk about the pros, the positive side of QE. Of course, we all know that under quantitative easing, they're going to print a lot of money, buying a lot of bond, but you have to aware that all this conducted mainly in Wall Street. So it is not hard to imagine that those benefits will go to Wall Street. Okay, the benefit, the asset appreciation, the asset bubble coming as a result, will also go to the Wall Street. That makes sense, right? But then on the other hand, let's talk about those inflation, the market instability, those loan issues. These are the evil side of QE. Where will it be reflected to? It is not hard to imagine that it will likely go to the local bank balance sheet. So the good sides mainly comes to the Wall Street, and the bad sides of QE mainly goes to the local bank. So this is why the reason that they might have a different view and standpoint towards QE. Some of them might striving hard to say that QE must be maintained for different reason, while some of them will be very eager to end this as soon as possible. So I think under this episode, you may have a better understanding of the dynamic for the overall Federal Reserve system, and you might be able to better understand why those officials speak from that particular point of view. If you think this video helped you to understand Fed more, please help to click the like button and subscribe for me. See you soon.